If you spend more time tweaking your trading strategy than actually trading it, if every trade feels like a life or death decision, or if you start saying, I'm going to take trades only when the setup is perfect, then this video is for you. Overthinking is the biggest invisible enemy to a trader's journey, and today I'm going to be showing you 3 powerful setups and steps to stop that mental noise and execute with confidence and finally build out consistency in the markets. Now, most traders, they don't fail because their strategy is bad. They fail because they never really give a strategy chance to work. They hesitate, they doubt, they overanalyze, and they miss trades that would have made sense in their proven strategy. In this video, I'm going to be breaking down 3 things: how to simplify your trading strategy so your brain stops interfering, how to train execution like it's a skill, not a gamble, and how to build confidence that leads to consistency. Simple, practical, no fluff. Let's get into it right after this intro. Make sure you hit that like button, that subscribe button, and let's dive right into the screens. So let's simplify the strategy and remove decision paralysis. Overthinking starts when your strategy has way too many variables. If your charts are cluttered, if there's too much noise, if there's too many things that you should be looking at one singular time, you start to develop analysis paralysis, right? If you're analyzing 10 indicators, 4 confirmation piece of information, 3 time frames, and then position of the moon, stars, blah, 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 of course you're going to freeze before pulling the trigger. Consistency comes with simplicity, and here's how we can simplify our strategy right now. Right, we want to reduce the strategy to 3 core components: the market condition, right, whether we're trending, ranging, whatever the case is. Understand context. Context, the way I look at it, is going to come from a volume profile, understanding where balances are. Number 2, the trigger, your entry signal. What is it that you need to see to get in, right? It's very simple. I'm going to be breaking down just 2 individual things that I want to see for that entry signal. And then invalidation, this is where your stop loss is. This is where you know you're wrong. That's it. If your setup doesn't fit those 3 boxes, don't trade it. Remove the maybe trades. Every overthinker struggles with the almost setup. Well, it kind of looks like my system. Maybe it'll work. These are death traps. You want to have binary logic. Yes, it fits the plan, take it. No, it doesn't fit the plan, skip it. No thinking in the middle. And you also want to set your strategy rules visually. Print your rules, put screenshots from past examples, what things line up very well, and keep them near your station. This reduces the mental load, clearer decisions, and it turns into less hesitation. So when I'm looking at this, right, you take S&P or NASDAQ, for instance, you might see on the screen here that there are so many different things that I'm looking at, but it's actually kind of simple. Here we have the volume profile chart on the right, and then here we have just a general range bar chart on the left with delta. Now, the volume profile chart, I don't have to stare at it at all times. I just have to know where we are in terms of balances, where my plan comes from. This is step number 1, context. So if I'm inside of balance areas, I generally want to look for the long side unless those balances fail, right? For instance, if I take a look at today, well, the makeup of the current movement is we're about to open above this 22-24 balance bottom. You can see it right over here. So that means that realistically, I should probably be looking for longs in and around that area, or if we get above this 50. Failure to move into this next area, 63, kind of invalidates that. So if I look at this around that 22-25, I generally want to be looking for that long confirmation, right, to get into those trades. If I look for triggers, my triggers are going to be fairly simple in this regard. I'll look for some kind of absorption based on these red candles, right? And then I'm going to try to pull the trigger in and around those areas. Ideally, what I have is going to be some kind of order flow confirmation, which can come from a footprint, for instance. I can take a look at a footprint and say, okay, there's heavy buying, for instance, at an area, and that's going to pull the trigger for me. If I look at the footprint in that area, right, into these lows, if I'm in and around that 25 area, I want to see the big buyer. So if there's no big buyers there, then I want to bypass the trade. It's not going to fit that system of rules. So if I see the big buyer, I can buy pullbacks to get that move all the way up into the next resistance point. So just like that, I only have those 2 triggers, right? I want to see a massive buyer if I'm buying. I want to see a massive seller if I'm selling at the key areas that I care about. So if I'm looking at this, right, we have some absorption. I wait for the buyer, and then I'm getting in as prices are rallying higher, right? It's easy as that in a sense. it fits my strategy, so I do want to take it. There's obviously a lot of moves, but me trying to catch every single one is probably not going to be very realistic. So I want to pinpoint where I can actually get in with a higher degree. Now, the second part to this, execution is a skill, so we want to build it like an athlete. Here's the truth. You don't have an analysis problem. You have an execution problem. Execution is not automatic. It's not natural. It must be trained. So you want to use mechanical repetition, right? Stop testing your ideas in your head. Stop waiting for the perfect trade. Execution is built up by doing reps, just like training, right? 3 steps in terms of building out that execution. Backtest 50 to 100 trades that follow those rules exactly. Replay charts at least an hour a session if you can, a few hours a week, and then take the next 10 live setups with zero rule breaking. You can practice it in either a simulated or a prop environment, so there's not too much risk on the table. And these reps teach your brain one thing: I follow my rules no matter what. You want to really define your job as a trader, right? Your job is not to predict the market. It's not to call tops, it's not to call bottoms. It's not about being right, but it is about identifying your setup. It's about executing when it appears. It's about managing risk and tracking data. You can kill hesitation by setting a rule. If all criteria are met, I place the trade, right? This stops your mind from spiraling into what ifs. Stop avoiding losses, or at least trying to avoid losses. Overthinking is usually just the fear of wearing a smart outfit, right? You're not analyzing more, you're trying to prevent a loss. Losses are very normal, they're expected, and they're required for you to have a better understanding of what things work and what don't. So for instance, like I said, if I'm looking at execution, I'm only going to execute, number one, at key areas I care about, which are auction extremes. So let's say, for instance, we're looking at the S&P here, and we have a key area at 68.13 based on this volume profile drop off. You have several sessions that are holding that area in terms of individual session imbalances. I have another area at 24, right? 68.24, which is a volume drop off as well. And then I have 68.50 and I have 68.63. So realistically, if I'm above these areas, right, my thought process today is I want to be bullish because we're holding above this balance as we've entered into it, right? And that's giving me contextual bullish understanding. So what is it that I want to do? Now I can sell at extremes, right? Like this 68.63, it's a fade. Maybe I need a little more information. I can sell under this 50. It's a fade. I need a little more information, right? But for me to actually execute, whether it's a fade or whether it's on side of the trend that I'm trying to get a hold of, like I said, if I have some delta that gets absorbed into this area, right, and I saw those buyers, I'll pull a trigger when they come back into the buyers. I have some delta over here, it rotates back down. I see some buyers, I'll pull the trigger. If I'm back under this area, which is a different trading strategy, we failed to expand outside of an area of balance, we move back into an area of value. So if the area of value starts under 68.50, okay, what is it that I need to do for my execution? It's always going to be the same thing. I don't want to execute something sporadic or random. I want to think, what will provide a consistent trade opportunity day in and day out? So number one, I wait for some absorption, meaning that these blue candles start getting rejected. So that's telling me that the buy side, although strong, is starting to wield some kind of stagnation. There's some kind of absorption that's taking place into those buyers. Next thing I want to do is I'll look into the footprint, and my number one rule is I don't want to be a seller if there's no aggressive selling. I don't want to be a buyer if there's no aggressive buying. So what do? I wait to see if the buy deltas, right, these guys over here get trapped, and the true sell delta comes and we hold it on a rejection on the second test, and I'm willing to enter in and around this area that's proving that the sellers are there. So you notice the two examples in this individual day, they're at key areas and the execution is the same. Those rules are consistent. That's what helps me build confidence, because confidence, right, step number 3, comes from data, not your emotions. It's something that you earn through data. It's not something that you wake up with, right? It's one thing to say, okay, I'm going to wake up, step in front of the mirror and say, I piss excellence today and all my trades are going to work. It's another thing to look at this and say, okay, I consistently see that there's a pattern, that there's a high probability of success if I take trades that follow these rules. You can build confidence by journaling, right? Track your setups taken. Track the rules that you followed, either yes or no. Ideally, the rules, when you follow them under the yes category, they have a higher probability of working. The no category is absolute garbage. Track how you feel in the outcome, right? You'll start seeing patterns when you follow your rules, results will improve. When you hesitate, those results drop. This is how confidence is built, with proof. When you see that your system works multiple days over and over again with some losses here and there, what you're going to do is you're going to build that confidence that you can see the light at the end of the tunnel, right? Review your trades and your data weekly. Ask yourselves, what rules did I break the most? What rule made me the most profitable? What setups are my most consistent? Over time, you're going to learn what works for you, and that eliminates about like 80-90% of the overthinking. You want to create a confidence library. Take screenshots of your best trades, entries, stop losses, reasons. This enforces, I know what I'm doing, I've seen my strategy work, and I can trust the process. This is what a journal is all about, right? Highlight the Hall of Fame and understand what trades are consistently yielding profit, because those are the ones that you want to focus on, right? So you want to go through your process, which builds confidence, which turns in consistency. Consistency doesn't come from motivation, new indicators, trying harder, waking up and saying that you piss excellence. Consistency comes from repeating a process, trusting your data, taking trades without second guessing. So when we wrap all this up, right, it's maybe a lot of things that a lot of people know, right? How can you get better? Okay, you put the reps in and do what is supposed to be right, but how do you actually do that? Well, through data. A lot of people don't give their strategy enough time to show them that it works or it doesn't, because number one, they're not collecting the data. Number two, they're not following rules. So they lose confidence and they start overthinking. They start second guessing. Overthinking is silently destroying many trading careers, but only if you allow it. Simplify your trading strategy, train your execution, and let the data build your confidence. If you do those three things, you will see that there's going to be progress, not because of luck, because of discipline, realistically. So if you want more understanding of what it is that these specific setups really mean and how to actually pinpoint those consistent points of execution, you can check out TradeProAcademy.com. Our course is now live. You guys can go check that out. But you can get a lot of free information here on YouTube and joining our free Discord community.tradeproacademy.com. So smash that like button, hit that subscribe button, and we'll see you at TradePro.